Here are some important questions and answers related to valuation and market analysis for the TREC exam's national portion. What do you understand by the market value? Answer: market value is the most probable price that a property would sell for in an arm's-length transaction between a willing buyer and a willing seller, with neither party under duress or undue influence. What is the income approach to valuation? Answer: the income approach to valuation is a method of determining the value of an income-producing property based on its expected future income stream. It involves estimating the property's net operating income and applying a capitalization rate to determine its present value. What is the sales comparison approach to valuation? Answer: the sales comparison approach to valuation is a method of determining the value of a property by comparing it to similar properties that have recently sold in the same area. It involves adjusting the sale prices of the comparable properties to account for differences in features and amenities. What is the cost approach to valuation? Answer: the cost approach to valuation is a method of determining the value of a property based on the cost to replace it with a similar property, minus any depreciation. What do you understand by the depreciation? Answer: depreciation is a decrease in the value of a property over time due to physical deterioration, functional obsolescence, or economic obsolescence. What do you understand by an appraisal? Answer: an appraisal is an estimate of the value of a property by a licensed appraiser, based on a thorough analysis of the property and the surrounding market conditions. What is a comparative market analysis? Answer: a comparative market analysis is an estimate of the value of a property based on recent sales of comparable properties in the same area, conducted by a real estate agent or broker. What do you understand by the gross rent multiplier? Answer: a gross rent multiplier is a measure of the relationship between a property's sale price and its gross rental income. It is calculated by dividing the sale price by the annual gross rental income. What do you understand by the absorption rate? Answer: absorption rate is a measure of the rate at which available properties are sold or leased in a particular market, expressed as a percentage of the total available inventory. What do you understand by the cap rate? Answer: a cap rate is the rate of return that an investor expects to earn on an income-producing property, based on the property's net operating income and the investor's required rate of return. What is the principle of substitution? Answer: the principle of substitution is the idea that a buyer will not pay more for a property than they would for a similar property with the same benefits and features. What is the principle of contribution? Answer: the principle of contribution is the idea that the value of a particular improvement or feature of a property is based on how much it contributes to the overall value of the property, rather than the cost to install or maintain it. What is the principle of highest and best use? Answer: the principle of highest and best use is the idea that a property should be used in a way that maximizes its value, given its physical characteristics, zoning regulations, and market conditions. What do you understand zoning ordinance? Answer: a zoning ordinance is a set of regulations that govern how land can be used in a particular area, including restrictions on the type of structures that can be built and the activities that can take place on the property. What do you understand variance? Answer: a variance is a request for an exception to the zoning regulations for a particular property or use. It is typically granted if the property owner can demonstrate that the regulations would result in an undue hardship or that the property has unique characteristics that justify an exception. What do you understand rent roll? Answer: a rent roll is a document that lists the tenants, lease terms, and rental rates for a particular rental property. What do you understand leasehold estate? Answer: a leasehold estate is a type of property ownership in which the owner, the tenant, has a temporary right to use and occupy the property, subject to the terms of a lease agreement with the landlord. What do you understand lease option? Answer: a lease option is an agreement in which a tenant has the right to purchase the property at a predetermined price and terms during the term of the lease. What is a leasehold improvement? Answer: a leasehold improvement is a permanent improvement or alteration made to a rental property by the tenant or landlord, typically to make the property more suitable for the tenant's needs. What is the gross income multiplier, GIM? Answer: the gross income multiplier, GIM, is a measure of the relationship between a property's sale price and its gross rental income. It is calculated by dividing the sale price by the annual gross rental income.